Hello and good morning once again. It's Levi Thunderstorm, and I'm with you here again for another release. Okay, now we've spoken about fresh level on fresh level. We've spoken about breakouts and market structure shifts. I want to talk about what do you call it? Bias. Exactly, bias. And yeah, if you're using the ICT concept, you have used with the word called bias. If you're used to Malaysian SNR, you are used to the word called storyline. Storyline, market bias, daily bias. Yeah, those things are things that most people are still kind of struggling with. And I want to kind of simplify it this morning. All right, coming to the chart here, you can see that, okay, all right, clear these things out. Let me try to use another asset this time around. I've not, yeah, let me use this asset. Let me see. I want to make it as simple as possible. Okay. All right, reset this whole thing. Now we're talking about bias, like market bias, daily bias, storyline, and all. Okay, where will the market go to today? Will the market go up? Will it go down? Will it go? The first thing you need to know about all this is that for you to understand market bias, there's actually a lot of things you need to consider. But at least for the basic is that I've done way to explain what we call support and resistance, key levels, on fresh and fresh levels. I've explained market structure shifts and breakouts. If you're going to understand, or if you're going to understand what's called a storyline or a bias, storyline and bias, these things are still the same thing. In a simple word, is that you are asking a question: where is the market going to? Is it going to go up? Is it going to go down? There are ways to know these things, and that's why I did well to teach you market structure shifts, breakouts, break of structure, and all that. And I explained that market structure shifts and breakouts is still the same thing. Breakouts, which is the same thing as break of structure, which is the same thing as change of character, is still the same thing. The only difference between market structure shift is that for the market structure shift, it is also a breakout, but no, you see a breakout, it's a break of structure, but the kind of break of structure that reverses the direction of the market entirely. Do you understand? Watch it in the other video, you get to get the explanation. Okay. Now, if I'm looking at my charts this way, all right, and I can see that price came to this place. If I want to know if price is going to break this way, all right, or come down this way, you have to look at not a lot of data, but just few information backwards. Do you understand? From that information you get, you can most likely tell that, okay, price will come down this way, or just what? Or just do this and move up. Or, worst case scenario, just blows through. Do you understand? To understand your market structure shift, to understand your daily bias and your storyline, I will teach it in two ways, using ICT concepts and Malaysian SNR. Now, using Malaysian SNR is this: when you have a line, a level, I like calling the line a key level, a price level, on a particular time frame. It can be a 10 years time frame, it can be a 10 billion years time frame, it can be a 1 second time frame, any time frame. The moment you see price do this set of steps and come downwards, and you see that price rejected on a particular price level, rejects, and it forms a candle like this, all right? I want to make it kind of visible it rejects, and you see, you get a rejection. Now, when you find a rejection, what you need to do is that you go down to your lower time frame. You just put a circle there. You go down to your lower time frame, and on your lower time frame, in that circle, what you are looking for is that you want to see where market structure did this and broke this level. See that level I drew there? The moment price breaks this because on the bigger time frame, this could be your daily time frame, and you are not seeing that there is a break of structure down there. You understand? So you will have to go down to a lower time frame to spot that break of structure. The moment you see that break of structure there, you can begin to expect price move this way, and then on your daily time frame, begin to see how that price goes up like this. Is it clear now? Okay, now let's look at something here. Okay, that's for Malaysian SNR. Yeah, what I just did now is for Malaysian SNR. What about for someone who is using ICT concepts? Let me help you out there as well. Is that this is what I would expect. It's still the same thing basically, actually. It's still the same thing. But I'll be flexible around it. Okay. Now let's see what we have here. You're looking at this whole chart here. You can see that some people go very, very far, but you don't have to go that far. The first thing to do when you want to determine your daily bias is to look for your most recent break of structure. If you use a line chart, you can quickly identify that. I can use this crest, I can use this peak. But let me use, because these guys are almost looking almost equal. You can call them relative equal heights. I will just place my line at this one here. Because I can see that this guy has broken above it, so I can put it here. So this will be my most recent break of structure. What does it look like on the candle chart? Let's check it out. Using Malaysian SNR, this is my break of structure because this red candle where my hand is pointing to has closed above it. But if I was to use ICT concepts, I'll put my line on this wick here. You can still see the same thing, but it depends on what you want to achieve. All right. Okay. Now the next thing is that now that I've identified that this is my break of structure, you can see that it's broke structure to the upside, and that means that the market is bullish. It is bullish. So it means that in your analysis, the mindset you should have when trading this asset is a bullish mindset. Okay, you want to take buys. So it means that I'll be expecting that this level also. Look at what it looks like on my candle, on my line chart. You can see it's also a crest. I'll be expecting that price to come from here and break above this level. Do you see? That's what I'll be expecting. So you can say that your bias is a bullish bias. It's that simple. It doesn't have to be that hard. It's that simple. Now, for example, now you are here right now. Okay, this is where you are. So let's say I was trading with the daily time frame. I would just probably put my entry here. Where's my entry? I could just put my entry here. Let's put. Oh boy, what's happening? Put my entry there. Okay, there is no. Oh god, there is no. Yeah. Okay, you can't trade this symbol. Okay, fine. So I would put my entry here, then I'll put my stop loss here. Just imagine. Like I'm not doing much of technical analysis right now. Why you start asking me questions in case you're a pro. Okay, so this is just to make it as simple as possible. Then I will expect that price will come down here. Somewhere here, then go up. Then go up to break this guy over here. So that's how you can determine your bullish, determine your bias. So this way now I've shown you how to determine your bias in a very, very simple way. in a very, very simple way. How about for a bearish scenario? Observe that. Okay, let me show you. Look at, if let's say you were over here at this point in time now, what would be your most recent breakouts? Check out your line charts. Check out your line charts. From what I see here, I see how the price. Okay, let me don't go so far. The most recent breakouts I see right now is that I can call this my breakout, but I'm not comfortable with it. Do you know why? Because this guy here, this guy I'm saying here, where my hand is pointing, is the highest high there. It's the highest high over there. Do you understand? So I'll in my mind I'll be like, okay, why is this guy, this peak now where my hand is pointing to, this peak, why is this guy not closing above it? That would be a question in my mind. Then I'll put my candle charts. Fine, it is not closing above it. Then the next thing I observe is that, okay, I can see how that price has also broken below this point. You can see this low over here. You can see how price broke it. Has broken below it. With this right now, you can see how that I will say that this is my most recent breakout. Now, the next thing is that I can tell that, okay, this is bearish because it has broken this place downwards. This high over here was not broken. This high was below this one, and this low has broken below this low. So I'll call it a bearish breakout. Then I would play further. Can you see what's happening? Also, looking at the fact that this low also has been broken as well, this signifies a bearish breakout. So you can tell that your buy is bearish. Now let me go to, trust me, I'm going to make plenty of videos on this things like breakouts, buyers and all. I'll make a plethora of videos that will make it much simpler. So after much examples, you will finally get the hang of it. Now, what's the next thing I want to show you is this. What's the next thing? Okay, let me see where price reacted from here before. Oh, okay, fine. There's actually a lot to learn. So that's how you can determine your bias in a very simple way. In a very, very simple way. Now, what if, okay, I want to show you something. That's the last thing I want to show you before the end of the video right now. Now, can you see that? I want something very, 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 very easy for you to grasp. I can't find what I'm looking for. Okay. Alright, so that's how you can determine your bias in a very simple way. I will end the video now, and hopefully if I can get what I'm looking for, I'll be able to show you. Okay, let me use this, but it's not what I need. Good, very good. I've found what I need. I've found what I needed to show you. Now observe that. Look at where my focus is inside this box. All right. Observe that. Now I'm deleting it. Observe that. The price was actually going. Can I replay this? Fine. Great. If I can replay it, that would be great. Good. Very good. You can see how price has been coming downwards, and see what happened. We observe that now if we're expecting price to go downwards, but if price should break this place upwards, okay, you would see this. Now see how price broke it upwards. All right. Now you can tell that this is what a bullish movement, a bullish bias. At the moment when price came down to this point, this point. Let's. I would want price to react from this level. Can you see where? Because if you should put your line at the wick, this is what it looks like on the charts. This line is standing on nowhere. But what if I added my charts, my line to this crest, this solid line here, this crest? I want that price should react from it. Now, do you see what price did? It came down. If I put my line also on this, why am I putting my line over here where my mouse is pointing to? Look at your line charts. Can you see where it is? Now, at this point, because I can't take my replay to a lower time frame on a free account, what you do is that you go down to a lower time frame, and this is what you look for. You look for this. Inside that box, all right. Inside that box, you look for something like this. This breaking, coming downwards, and you take your buy. That's how you can determine your bias. Do you understand? Okay. So in the coming videos where I will have plethora of examples, you will get to see it unfolding more. I will have to end the video now. I just want to keep teaching you guys these things, like making it simplified. All right.